Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Boston Beer Co. Inc. quarterly report. The Boston Beer Company offers a diverse range of beverages under various brand names, including Samuel Adams Beers, Twisted Tea, Truly Hard Seltzers, Angry Orchard Ciders, Dogfish Head Beers, Angel City Beers, Coney Island Beers. These products are sold through wholesalers in the U.S. and internationally to retailers such as grocery stores, liquor stores, bars, restaurants, and online platforms. Boston Beer Co. Inc.'s stock price drop. A year of decline. The Boston Beer Company Inc. has seen its stock price plummet by 27.25% in the past year due to a combination of factors. The primary cause is declining sales volumes for key brands, including Twisted Tea and Truly Hard Seltzer, which have experienced significant drops in demand. This decline in consumer interest is attributed to shifting preferences towards non-alcoholic and cannabis-infused beverages. The company's revenue has also been impacted by its failure to meet analyst expectations, with net revenue decreasing by 11.2% year-over-year in the third quarter of 2025. Analyst downgrades and cautious outlooks have further contributed to the stock price decline, as CD Research lowered its price target due to anticipated margin pressures. Tariffs on imported aluminum have also increased costs for the company, while shortfall fees from third-party production agreements have added to its expenses. Despite some positive developments, such as improved gross margins and growth in newer brands, these factors have not been enough to offset the negative trends in sales and market sentiment. As a result, Boston Beer Co. Inc.'s stock price has suffered significantly over the past year. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. A significant contributor to revenue decline is the decrease in sales volume, resulting in a loss of $82.9 million on page 30 and $64.8 million on page 32. Conversely, increased pricing has led to an increase in revenue, with gains of $6.3 million and $20.3 million on pages 30 and 32, respectively. A favorable product mix has also played a crucial role, adding $6.1 million and $12.1 million to revenue on pages 30 and 32. The growth of certain brands, such as Sun Cruiser and Angry Orchard, has been a positive driver, while the decline of others, including Twisted Tea, Truly Hard Seltzer, and Samuel Adams, has had a negative impact. External factors have also contributed to revenue decline, including tariffs announced by the U.S. government, which increased costs by $13 million. Changes in consumer demand due to these tariffs and currency-related impacts have further exacerbated the decline. Net income and profit margins. A shift in performance. The financial performance of a company has undergone significant changes between the periods ended September 28, 2024, and September 27, 2025. Net income has increased by 38% for the 13-week period and 33% for the 39-week period, indicating an overall growth trend. However, profit margins have shown mixed results. Gross profit margin has decreased to 50.7% in the 13-week period and 46.8% in the 39-week period, whereas operating income margin has increased to 11.1% in the 13-week period and 10.9% in the 39-week period. Several factors have contributed to these changes. The company incurred shortfall fees, which negatively impacted profit margins. Tariffs also had an unfavorable cost impact of $9-13 million or $0 and $0.60-$1.80 earnings per diluted share in 2025. Additionally, advertising and promotional expenses as a percentage of net revenue increased from 25.6% to 29.3%, further eroding profit margins. These factors have offset the growth in net income, resulting in a complex financial landscape for the company. The company is indeed generating positive operating cash flow. This is evident from the financial summary, which states that net cash provided by operating activities for 2025 was a substantial $230,218. Furthermore, when breaking down the cash provided by operating activities, it totals to $230.2 million, confirming the company's ability to generate positive operating cash flow. Management is optimistic about the company's outlook, citing a decrease in cost of goods sold and an increase in gross profit. The company expects its cash reserves to be sufficient for future needs. To drive growth and efficiency, management plans to invest in production facilities. However, tariffs are expected to have a negative impact on earnings, estimated at $9-13 million or $0.60-$1.80 per share. The company's financial summary reveals that it has engaged in two distinct capital allocation strategies. Firstly, the company has chosen not to pay dividends to its shareholders, indicating a preference for retaining earnings within the business. Secondly, the company has actively bought back shares from the market, demonstrating a commitment to returning value to its investors through share repurchases. Concerns about inventory buildup and supply chain disruption are mounting for the company. The long-term inventory has increased significantly from $6,076 to $7,703, indicating a potential surplus of products. Furthermore, shipment volume has declined by 3.7% due to decreased demand in certain brands such as Twisted Tea and Truly Hard Seltzer. Additionally, recent tariff programs and changes in consumer demand or currency-related impacts pose further risks to the supply chain, exacerbating concerns about inventory buildup and potential disruptions. That concludes the financial summary for Boston Beer Co. Inc. Feel free to comment below, and I will be happy to answer them when possible.